Hey, good morning, everybody. So I'm on a little earlier. This morning, we're dropping PCE numbers in about 40 seconds. So we're going to have CNBC join the screen, and then we're going to break down the PCE numbers. After that, I'm going to talk about the SPY and the ranges, because as the SPY is sitting pre-market at 377.58, understand resistance could be 378, or it could quickly turn into support if they're buying up the market. I'm going to talk about whether I'd rather own Meta or Amazon. I'm going to talk about my new challenge starting on Tuesday, November 1st, where I'm going to take $500 and hopefully turn it into $10,000. I'm going to let you know the rules and how to participate if you want. So we've got a lot going on this morning. I'm also going to talk about the rejection levels, what the Fed is going to do next week, and the effect that it will have on our market. So there's a lot to cover today. Understand, past 2 trading days, tech is down 3.6%. The month of October so far, the Dow is up 11.5%. Do you see some discrepancy, right? Dow stocks a little stronger. Dow stocks like Carnival, cruise lines, airlines, things like that, whereas you have tech stocks where they just sell off one after the other. The only one that didn't sell off is Apple, which is holding the market up. Okay, so again, we're going to do PCE. We're going to break that down. I'm going to talk about the SPY, the Fed. Oh, okay, let's bring on PCE real quick. Let's turn up this volume.
Has been a very wild week. Of course, we're watching yields down on the week rather dramatically, and employment cost index hitting the wires. This is a third quarter number, expecting a number around up 1.2%, spot on up 1.2%. The high watermark here in this series of data goes back to 1996, was in March when it was up 1.4. So we've eased back, but not a whole lot. Personal income expected to be up 0.4, also delivered exactly up 0.4.
That's good news as well. People making more money.
A bit more, up 0.6. We're also expecting up 0.4 there. So that's a nice beat. That's the best look actually since June, where it was double that at up 1.2. And if we look at real spending, and we all know real is an important word these days, keep it real means you have to adjust for inflation. And real spending up 0.3%. That's spending also more, making more, better than we were looking for, and up 0.3%. Actually, to find a higher number than that, you have to go all the way back to January when it was up 0.7%. Now we're getting into the real meat of it. PCE, personal consumption expenditure deflator, on a month-over-month basis, it is up 0.3%, which is way below the high water mark, which is 1.0, and that was in June of this year. So that is definitely a nice one, and it sequentially follows up 0.3. If we look at a year-over-year number, 6.2 exactly is in the rearview mirror, a tenth cooler than we were looking for. High water mark there was in June at 7%, which happened to have been the highest since 81. So we've definitely come down a bit, but like yesterday's numbers, like a lot of inflation numbers, they've come down, but they're not coming down to levels that are going to make the Fed potentially feel as though they can take their foot off the gas, or excuse me, the brake. They've got both feet smashed on the brakes. Okay, personal consumption expenditure core deflator month over month, and that's a number that we're expecting to be up 0.5. It comes in 0.5. The high water mark there was 0.6. That goes back to 2001, and that was in April and June, April of last year, June of this year. And finally, the year-over-year PCE core deflator, probably one of the more important numbers in this series, 5.1 following 4.9, and 5.4 in February was a high watermark going back to 1983. It's pretty easy to summarize. Many, including large institutional.
Let's bring him off because I know what's going on. Okay, so let's get rid of him. Let's talk about what's going on. Things came actually in line, okay? The numbers weren't hot as expected. So that tells some people that the Fed could slow down a little. Me, I don't think the Fed's going to slow down a little, but I don't gauge the market. So here's what's going to happen today. As we saw, futures were as high as up 150 points. Tech was obviously struggling. What's likely to happen is we're likely to dip at open. We're going to dip at open, and then it's either going to be, in my opinion, bought up. Now, let me talk about why I think that's going to happen. We had 4 to 5 straight inflow days in the market in this SPY. Yesterday was consolidation. I was looking for consolidation one day earlier. So what we saw yesterday And again, if you look at certain stocks yesterday, you would have thought it was a bloody, bloody day. But Dow was actually up. Dow consisting of like energy companies, travel companies, okay. Anyway, so let's move on. Let's just talk about the numbers real quick. Numbers came in line, okay? If the numbers came in hot, it would have meant the Fed has to be more hawkish. The markets would have dropped significantly. The fact that they came in line still leaves people thinking the same way they were earlier this week when we're in a bull run in a bear market. So people are going to still think that way. Why? Because the numbers were in line. So we're waiting on the Fed to speak on Wednesday. Now, on Wednesday, what they're going to say is, we're raising the Fed funds rate 75 basis points, and then they're going to start talking about what's going to happen in December. So if they mention 75 basis points in December, the market goes down significantly. If they mention a number like 25 basis points or 50 basis points, the market will react strongly. So again, what we're looking for today, the numbers were in line. GDP numbers, gross domestic product, which was yesterday, came in stronger. Okay, so it's telling us our economy is still decent. So that's why I expected consolidation, meaning we are going to push higher in the markets, okay? I am still a bear, but we are in a bull run. So any simple pullbacks that we're seeing like yesterday or in certain stocks, and we'll say Metaverse, Amazon, I'll give you my theory there in a second, we're going to see them consolidate and then go higher. So Metaverse, Amazon, both came out terribly. Meta said they're putting more money in. They're not getting as much money advertising. Meta stock went sub 100, then it bounced to 102, and now it's sitting at $97 pre-market. Amazon, which missed estimates, which raised their cost, which didn't give you great guidance, is down 13% pre-market. Understand, Amazon news just got released yesterday. People had over a day to jump in and digest Meta. So if I had to pick one of those two for a simple bounce, I would be choosing Meta. I wouldn't be choosing Amazon. I would give Amazon at least 3 days to settle down. And when I say that, we could easily see Amazon bump up from down 13% to down 8% today. And then it could drop next week. Or we could see Amazon at minus 12% pre-market and then all of a sudden drop down to about 17% today before it gets bought up. Again, I believe that the institutions, that the hedge funds, that the big money will be buying these companies. Why? Because let's say I can get into Amazon at $94. I'm just going to look forward 4 years. 4 years from now, I'm going to say Amazon's $320. If I'm in at $94, $96, wherever Amazon is today, and let's go 4 years out. 4 years out, it's $300. That's a 200% return. Most companies, most institutions, most banks look to promise their investors tax-free 8%. If you're paying tax, they're going to try and earn you 11 to 12 to 14%. The really good ones will earn you 18%, but you turn 18%, you compound it, and you take it forward 4 years, and you're still maybe like 92%. You're nowhere close to 200%. So understand, that is the simple reason why some institutions and big money will be buying Meta. We'll probably be buying Amazon going forward over the next 3 or 4 trading days. But no, I don't think we've seen the worst in Amazon. Now, what am I going to see about the market today? Well, before I talk about the market today, we'll talk about the SPY and what it's done the past couple of days. So it hit 385 on the SPY, rejected 3 times, okay? It hit 375 pre-market overnight. It found support at 375. So right now it's sitting probably around 378. Let me just check, see where the SPY is. Okay, 379. So already up past the 378 support level. So I'm going to go over the levels because you can write these down. We don't have to hit them today, tomorrow. They're still good for next week. If there's some downturn in the market because the Fed is aggressive on Wednesday, then we're likely to hit the low end. So I'm going to start on the low end and work my way up. 368 is currently support, obviously, because we're north of that. Then you have 371. Then you have 375. So we hit 375 pre-market. Understand, if today is red and it's bloody red and we hit 375 and we break downward, then 371 is likely in play. Me, I don't see that because I still think we're in a bull run in a bear market, and all we're seeing is consolidation. Yes, we could see another day of consolidation. Consolidation would mean a narrow trading range, maybe something like 381 on the high side, 375 on the downside, and we kind of finish where we start. All right, that would make sense. I'm not extremely bullish because we did have all those terrible tech earnings, but then again, tech lost 3.6% as a whole over the past 2 trading days. And we know that Meta dropped 24% yesterday, and we know Amazon's down 13%, and we know Google dropped like 7 or 8%, all the way up to 10% if you add the past 2 days together. All right, now let's talk about my trading challenge that I have coming up. I'm going to start on Tuesday. I'm going to start with $500. The last trading challenge I had wasn't really a challenge. It was me saying or telling my best friend who lost his job that, hey, you could trade with $100. I was trying to give him hope, and he was like depressed. He lost his job. And I'm saying, okay, you could turn $100 into $10,000. You just have to do it slowly and let your money compound. And he's like, BS, you can't do that. If you could do that, I would believe I could do that. He's a smart dude. He's just jobless. So I said, okay, $100. I put it into a Moomoo account. Smartest thing I did was putting it into a Moomoo account. Why? Link below. If you open up a Moomoo account with a simple $100 investment before December 20th, you get a $10 coupon and you get 5 free stocks for funding your account with $100. So me, real quick, got the $10, 5 free stocks. That added up to $31.50. My $100 is worth $141 without even making a trade. But of course, I had to trade because I'm going to show this guy how to grow a small account. So I made small trades. $40 contract, sold it for $100. $60 contract, sold it for $200. I took $100, I turned it into $2,400 in 8 trading days, okay? People told me I missed out on that challenge, which is why I'm doing a new one. They missed out on those trades. Now, how to follow those trades? You have to go on our Discord. There should be a link below. It's all under Matt's Alerts and Insights. Yes, Discord is paid, but we give away 7 free days when you set up your trial. You join, you verify yourself, you accept. You don't have to pay any money. You don't have to put any credit card information down. You get 7 free days. What do you get? Well, you get my room of insights. You get the flow and algos and all those other data and analytic channels that people pay $100 a month, $150 a month. Romeo goes live on public once, probably private twice a week. Love, who's an accounting professor at our major university, gives her insight in the psychology behind her trades. All right, so there's all that. So we're starting on Tuesday. It must be a cash account. Now, here are some rules for that, okay? I buy an option and I announce I bought this option for $120. What do you guys do? You don't chase, you don't buy it for $140. You write in either $120, and a lot of people understand that they get it cheaper than me. If I pay $120, there's a good chance you could buy it for like 12% cheaper because I use a spreadsheet. I journal everything. And when I enter a position, I'm generally down on average 12%. Now, if I'm a pretty good trader and efficient trader and I'm down 12% on average, you guys might be down a little more. So here is a quick tip, okay? You're going to buy whatever contract you're going to buy. Say you're going to buy a Square, a PayPal, a SPY contract, UVXY, whatever it is, okay? Say the price is $239 and you know you're generally off 20%. Let's round up, $240. So how do you figure out 20% of 240? You say $24 is 10%. That makes $48 is 20%. I'm generally down 20%. I was going to pay $240, but instead of $240, let me put in for $2 or $200 per contract. That's down about 18 or 19%. I'm generally down 20%. So you put in $2 instead of $240 and you turn off your phone. That's it. That's a quick nibble. You're just going to save yourself 20%. Now, let's say you don't buy the contract. Okay, you're not in that investment. You know how many other stocks, options, you know how many days of the week there are next week. We still have 40 more or 45 more trading sessions before the end of the year. So it's like a casino. It's always open. However, unlike a casino, I don't want you to gamble on red or black, then tell me you're down $23,000 and how you'd like to just get even and leave. I used to have friends all the time. Dude, if I could just get even, I would walk away. Investing is not about getting even. It's about setting up and making a future for yourself. So even if you're struggling, we had some new people join our Discord, and one dude's like, I'm down $23,000, I have $800. Love who's on our Discord, who I mentioned below, was down to $856 in 2021 and then grew her account north of 56,000. All right, so let's get into it. 2-year, 10-year US dollar. We all know those are things that I look for pre-market. So I'm going to look for that. Again, the SPY is sitting at 378.61, 378 being support. I expect a dip at open, and then I expect support from the market. I only say that because we've seen the worst. We know what the Fed's going to do. We've seen the earnings come in, and they trash Meta 24%, and they trash Amazon 13%. And what have we seen lately? Every time they trash something, they buy up the dip. I mentioned that company, healthcare company, the other day. I think it was THC because I really like the symbol. Let me just make sure. THC, where is it? Oh, there it is. Telnet Healthcare, right? THC, great symbol. It was $38 the other day. It fell after earnings from $55 to like $38. I said it'll be back at $55 within 3 months. It's at $42.72 this morning. So it's getting there. It's up 10% from the low, and it's still another 30% to go from the drop. But okay, so I mentioned I like to look at the 2-year, the 10-year. Why? As interest rates go up, I've mentioned this on other YouTubes, okay? As interest rates go up, you have companies, corporations that have corporate debt. The U.S. companies holding corporate debt are holding $11 trillion worth of corporate debt. Worldwide corporate debt is $22 trillion. They have to refinance their corporate debt on average every 2 years. So a number of companies are going to come up and say, we have to refinance. So they look at the 2-year, which is 437. Remember last week it was 460 and then it dropped down to 430. So as it goes up, if you see it hit 440, 441, something like that, more expensive, market will likely fall. As it stays where it is, the market can continue to be bullish. Now I'm looking at the 10-year. The 10-year, which was 3.94 yesterday, is back up above 4%, 4.02%. So that tells me, again, there could be some downward pressure on the market. Again, let's go with what's going on in the market. We've got the market's going to go up if the Fed is more dovish. So what we're looking for next week, and again, so we have, here's what I'm thinking for my strategy. Let's go into strategy. So we have today, which is Friday, Monday, which is the 31st, I believe, Tuesday, which is the 1st, and then you have the Fed speaking on Wednesday. So my strategy going from Friday, Monday, and Tuesday is that we're still in a bull run in a bear market. We saw some consolidation. So I'm going to be looking at the support levels. Once I see us have support, I'm going to get bullish on the market, at least for the remainder of Friday and Monday, and I'll probably sell Tuesday morning. That's what I'm thinking right now once I see support. So support levels could be 371 on the SPY. Could happen late afternoon. The market could be ugly all day, and my only trade of the day could be like 3:50 p.m. swinging a trade over the weekend. Now let's talk about my trade yesterday. So I mentioned Micron. The stock symbol was MU. The stock was sitting at $55 and change. Now what did I do? I went on my Discord. I went into the flow and algos room, and I looked up the net flow for Micron, and it was all bearish, meaning the stock price was up here. The premiums for puts was up here with the crazy high stock price, and the call premium was down here. Nobody was buying calls. And it was outflow, outflow, outflow for 4 straight days. So I said to myself, any type of downward pressure on the market will bring Micron down. So I got in at $55.30. Okay. I secured 20% and 40% profit. Now Micron finished at the day at the worst level, and it's down another 1.5% pre-market. Understand, if anybody had held my alert, they would have returned over 125%, all the way up to, if you held this morning, 200%. Me, my options expired on Friday. It's about taking small victories and not worrying about what's possibly going to happen, because it's always risk versus reward and money management. If you have a small account, $100, $500, $1,000, and you over leverage yourself, or things are too risky, or you don't take profit, you'll go from being green to red. And then you'll press and try harder. The same thing my friends do when they go to the casino. They're down 500, and then all of a sudden they're down 2,500. So if you have $1,000 in your account and you can accept a loss because you let a position go from green to red, and you're like, okay, I'll lose 25 bucks, more power to you. If you hold that same position and your options expire today, let's say, and you're wrong about the market, your $1,000 account, instead of being at 975, will likely be at like 475. And then you're probably going to be risky as can be next week, and your 475 will likely go to 275. And then you'll just call yourself a losing trader, and there's no way out. So I'm here to give you hope. I'm here to show you how I trade. I'm here to give you insight into the market and talk about the psychology. And of course, lately, talk about the support and the resistance levels. So right now, even if we have a strong day in the market, I would look to reject 385. We're sitting at 378, right? The teetering point. Next step up is 381. We've seen the market move a lot on Fridays. If it does turn bullish, I would look forward to touch 381. I would see if it rejects or sustains its support. And then I would look for 385. On the downside, if we cross over 378 on the SPY, again, the next level of support is 371. 375. That's what I'd be watching carefully. All right, as far as my plays, I'm watching Meta today. I'm going to let you know because I always pick out about 3 or 4 stocks that I'm thinking about trading during the day. So, of course, number one is ETF is going to be the SPY. All right, then I have a couple of oil companies. No interest there because oil companies are at their high since September. They're straight up. And oil companies will probably get better. They're all at their 52-week highs, Chevron, Exxon. Then you have a company like Pinterest, which outperforms, had earnings beat, is up 10%. Pinterest was up as much as 14% pre-market. So if I see Pinterest go up down to 5% up, I might decide to jump in to ride it up from 5% up back to like 12 or 14%. So there's a trade. Intel was up pre-market anywhere from 4% to 7%. I will stay away from that. Again, I'm staying away from Amazon. Micron, which I already got out of my puts, is down 2%. It's down to $51. It was $55 and change. I said my exit strategy would be 52 and change. I exited out at 54 flat. Secure profit. It dropped another $1.50, and then it's dropping another $1 this morning. So I will not look to enter that stock. Teladoc, don't really like it. It was up on earnings. It'll probably give some back and consolidate. Now, McDonald's, Honeywell, Caterpillar all came out with earnings, all spiked yesterday. I actually like Merck. That might be a play for me today. It had consolidation yesterday, but its chart is up and away, understanding that China is still on massive lockdowns with their COVID. They're locking down cities, and we haven't even approached winter yet. When we do, again, that's why oil and energy prices will continue to rise. That's why China worries me, and China worries me being one of the world's largest economies. So Chinese market was down 6% on Monday, right? And then it bounced. You had a light bounce. Tuesday was flat. Wednesday it bounced. Guess what happened overnight yesterday? The Chinese market dropped 3%. So when you're looking at stocks like Alibaba, that was as low as $62, went from 62 all the way up to 67. It's probably trading at $63 again. Is it worth 63? Probably not the way the Chinese market is. Now, if Chinese market bounces hard, of course, it's an investment. But to me, a company like Alibaba, like NIO, like Baidu, or even PDD, or any other Chinese company is risky right now, and I wouldn't want my money there. All right, let's see if we have any questions today. Any questions today, Carlos? No questions today. Awesome. I'm going to head over to Discord. Everybody is welcome to join me. Link is below. Sign up for Moomoo. The thing, if you head over to Discord, get your 7 free trial days. I see so many people in public chat saying, where's my trial days? I can't see anything. Carlos posted in announcements what you do. You're in the free chat. You go to the announcements. You follow his instructions. And then you can see all of the rooms. We have like 50 rooms. My room. Romeo has a number of rooms. Love has a number of rooms. And then we have all the flow and algo. Bullseye, Golden Suite, flow and algo. You could type anything in. Big flow for the market. Most unusual options activity. You want to look at a specific stock. DraftKings. You see everything. That's what I did for Micron. That's how I knew Micron was going down. Did I think Micron was going from $55 to $51? No, I did not. But I thought it was going to $52, and it should have been a 100% trade. But I don't care. I take the profit. I like the profit. Join me next week. The challenge starts on Tuesday. It's only going to be on Discord. I'll post the results so everybody can see how we're crushing it elsewhere, but it's only going to be on Discord. So you have 7 free trial days. I will see everybody later.